Hey, what's going on? It's Lewis here with Crypto Elite, and in today's video, we're going to be going over what price you should be buying your cryptocurrencies at. First things first, I gotta put the disclaimer out there. I'm not a financial advisor. Everything in this video is for entertainment purposes only, and you should always consult with a professional when dealing with your finances. Now, before you actually buy your cryptocurrencies, you should have a game plan, and this game plan should be based off of the price and the previous prices that the cryptocurrency has been at before. Now, I know that when you're first starting out, you just want to buy everything right away. But the thing is that sometimes the market will actually show you that right now might not be the best time to buy. Sometimes the best plan is to simply wait it out and then buy a lot more later after you've had time to accumulate more money and more fiat. That is sometimes the best plan. I mean, don't get me wrong. Sometimes the best plan is to just buy it right away, buy it right now. And sometimes you want to do that. But sometimes it's not. So by following along with this video and looking at the different graphs and learning these techniques, you'll learn when it actually is a good time or not a good time to get into a cryptocurrency. In the end though, ultimately what matters is that you're comfortable with the price that you buy it at. Because if you're not comfortable with the price that you buy it at and then all of a sudden it just dips really, really low, then you'll be kicking yourself for not waiting and buying it when it was dipped lower. However, if you look at the graph and you look at the news and you like the price and you're comfortable with your buy-in, then it doesn't matter if the price goes down or goes up or whatever happens with the price, you'll be comfortable with it and you will have made the right decision at the right time. And when you feel that way about buying into a cryptocurrency or buying into anything at a specific moment where you're very comfortable, then anything that happens after that won't weigh so heavily on you. So with saying that, let's get to the video. So when you're looking to buy into a trade, you should look into the ones that have the most potential. And there are a few criteria to look at and to use when determining when to get into a trade. So these criteria include the price that you want to buy the coin at, the price that you want to sell the coin at, the price that you're willing to let the coin drop to, and the price that you're willing to let the coin ride to. So before you even buy a coin, you need to ask yourself, why are you even going to buy it? Why do you want to buy it? Did you hear news about it? Did someone on social media tell you to buy it? Did they give you a reason why? Know what you're getting into before you get into it, because there's always the possibility that it's just a pump and dump unless it's one of the main coins like Bitcoin, Ethereum, Litecoin, etc. When you know why you want to buy it, then you have to look at the chart and the graphs and determine if it's a good decision to buy at the current price. I know that when I first started out, I literally wanted to buy everything, and that's what I did. And believe me, I got wrecked because the reason why I wanted to buy everything was because I saw everything was just going up and I was drawn in by the mirage of never-ending green candlesticks. Well, green bars turn red and what goes up comes down. So you need to ask yourself, will the price keep on going up? And when will the price turn around? And when will that be a better price to buy it at? So let's go and let's look at some graphs now. So what you want to do is you want to look at where the price is right now. And then you could look at where the price has been in the past and you could determine where you want to buy. This is mostly based on how long you want to hold it. So if you're just going to hold it for a day or two, you want to look at the smaller time frames. So what that means is you want to come up here, and I'll show you this in Binance as well, but basically you want to come up here and you want to look at the 1 day, 12 hour, 6 hour, 4 hour, 3 hour, all the way down to 30-minute, 5-minute, 1-minute charts if you're not looking to hold it very long. If you're planning on holding it for longer, then what you could do is you could look at the longer time frames, like 1 day, 3 days, 7 days, etc. So right now I have ADA, I have Cardano open, and this is on the daily candlestick chart. So that means that every single candlestick represents 1 day. And if I look at this chart, I could see right here it was around 4.341, let's just say 4.4, right? And I could see that it's going down. And if you count how many days it took to go down, that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's about 10, 11, 12 days. And 13, 14. So now we're at like the 14, 15 day mark, right? If I'm going to buy it down here, I don't expect it to go all the way back up to, 0.44 in a day. Don't get me wrong, it can totally just jump back up, and there is always the possibility of a breakout where something could just jump and then reach all new time highs. You never know what could happen, especially if a news article comes out or if an update happens or something very big happens with the coin. It definitely has the possibility to jump up. So just because 14 days, passed since it was at its, say, last high, it doesn't necessarily mean that it's going to take another 14 days, but because I'm using the daily chart, I need to have more realistic expectations. In my mind, at least, this is what I view of it. Like, I don't expect it to just jump back up in 1 or 2 days because I'm using the 1-day chart. If I was using the hourly chart, then maybe I would say, okay, it has the possibility to reach that high again within a few hours. And I do this mostly for psychological reasons in case, it doesn't go up right away. And this sort of brings me more back down to earth and says, look, it took a long time to get there. It's probably gonna take a little while to get there again. And that could help you from getting so anxious. So if I wanted to, for instance, just be in and out of this trade in not very long, under a day, then I would look at this hour chart. I'd start here and I'd say, okay, well, it's down here, so maybe now is a good time to buy. And what I would do then is I would not just look at the 1 hour chart, because that's not actually close enough time frame to determine when the best price is, but I would go down to the 30-minute chart and I would look and I'd say, okay, this looks pretty good. And then I'd look down to the 15-minute chart, and then I would just go down to the 5-minute chart. And this is for if I want to simply just get in and out of a trade relatively quickly within a day or two, then you look at this. And if we go over to Binance, you could do the same exact thing on Binance. This is the Binance Advanced Screening. This is for DGD versus Bitcoin, or DGD Bitcoin pair. And you could see, okay, this is where it is. This is the 1-day chart. Okay, so if you were right here and this was where you were looking at the chart at, you might say, oh, wow, this looks like a good time to buy because it's pretty low. And there's also 2 indicators that show that it's probably a good price right now, which I'll go into in a second. So you would buy it and you would look at, okay, I'm looking at the 1-day chart right here. So I might expect this to come up and reach, somewhere around, like, definitely like, this point right here. So definitely around 40. So I would expect it to reach that. And I would say I would give it 1, 2, 3, 4, 5, 6. I'd give it, 7, 8 days to be able to reach that. And if you look over here, it took 1, 2, 3, 4, 5, 6, 7 days. And now it's back to the price where it was over here. And that's the thing, it's like a U-shaped curve right here. It's the U-shaped curve. It took 7 days to reach down. So it's going to take a few days to reach up. This isn't always the case. I mean, it's definitely not the case when coins get pumped or when big news comes out. The price could just skyrocket all of the sudden out of nowhere, and you don't really know. But this is just something that I sort of keep in mind when I'm looking at it, so that it doesn't get me so emotionally attached to it. Basically, the point is you want to buy low, which you could see right here is the low price, and you want to sell high. Buy low, sell high. And if you're looking at the daily chart, don't expect it to reach that high again within an hour or two. Give it a few days or longer if you want to reach back to the price that you want to sell some of it at. You got to remove your emotions from the equation, and that is what makes a really good trader. So there are 2 indicators that are really easy to use that you could use to determine if the price that you're going to buy it at is a good price or not. These 2 indicators are the support and resistance range and the MACD. I'll show you what it is right now. So check this out. This is Bitcoin/USD, and you could see right here, this is on the 1 hour chart, that there has been a lot of support around this level, the 9383 level, right? There's been a lot of support. That means that a lot of people are buying Bitcoin at this price, and there's been a lot of resistance at this level right here. So you're getting a lot of support right here, a lot of resistance right here, and resistance means that a lot of people are selling at this price. You see, in crypto, a lot of times coins, they get range bound. They go back and forth between two different levels. They go back and forth between the support that's holding them up, where everyone is buying, and they get held up at the resistance level where a lot of people are selling. And then eventually what happens is there's either a breakout where the coin breaks out and goes really high and comes above the resistance levels, or it'll fall below the support and it'll drop. So an example of breaking out of the resistance levels is right here. You could see there was some support levels right here and some resistance levels right here. And so it went up, down, up, and then it broke out. And then it skyrocketed a lot up. And when this happens, a lot of the times the old resistance becomes the new support. So if you check this out, it broke out right here, and then it went up and down and up and down. There's a little range bound activity right here. Then it went up, it broke out again, and then it went back down. But this level right here, this is the support, right? However, this used to be the resistance. So now the support is the old resistance. Then it went up and it went down, and then it broke out again. You know, it broke out up here and it continued to rise up. And now this is the new resistance. And then it went back down, went back up, went back down. And now this is the support. And now the support is the same as this one back here, and then it went up and then it went down. And now here's an example of the support breaking and actually going down, and going further down and actually dropping below the support levels. And now there's a new support, and now what happens is the new resistance is the old support. So this is like a bearish type of scenario, and this is a bullish type of scenario. Okay, and I just wanted to make one more graph just to make it a little bit more clear with some lines. You should, at this point, be able to spot the support levels and the resistance levels, which are in red for the resistance and green for the support, right? And these arrows represent the breakouts after it breaks out of the old resistant levels. So normally when it breaks out of the resistant levels, that indicates that it's going to go up and continue to go up in price. It's normally a good thing, but sometimes it doesn't happen. So you could see right here, it did break out, but then it went right back down, and then it reached the support, and it actually went underneath the support, broke the support for a second there, but quickly got bought back up and then went back to that range bound activity until it broke out. And then once it broke out, then it really went to the new highs, and then it went back into that range bound support, resistance, and then it broke out again, and then it got to new all-time highs. And this has been generally what Bitcoin has been like. I mean, look at this. It's only been going up and up and up and up. Of course, there is pullback. I mean, if you look right here, there is the huge pullback from about 19K all the way down to, $6,000 to $7,000. Which was a huge pullback. But overall, the long term, it's just up, like slowly been incrementally going up over time. And by looking at these support resistance levels, that could tell you whether or not it's a good time to buy a coin. So if something, just broke out, like you could see right here, I'll zoom in a little bit. So if you could see like right over here, it broke out of the resistance. So you could say, okay, now it's a good time to buy because it broke out, so it's probably going to go a lot higher. And then if you're looking to buy a coin, but you see, oh no, it just broke the support levels, and it's starting to go down, then you might want to wait and see just how far down it goes before you buy in. That's one strategy. The other strategy is a little bit more risky, but it does come with more reward. And that is if you try to time the market and you try to look at the graph and say, okay, well, here it is. It's been range bound over here between like here and here. So now I see right here, it's at the bottom of this little range bound area. This is the support, right? So I think that it's going to turn around and come back up, just like how it did right here and right here. So I'm going to buy it right here. But obviously you could see, oh no, it didn't actually happen. It continued to go down. So sometimes it could backfire on you if you want to time the market. However, if you time the market and it's a bull run, then you can make a lot more money. So for instance, over here, it was range bound between this level, around this level, and around this level. So if it went down here and you said, okay, it's right here, I think it's going to go up, because if you look over here, it went up and then it went back down and you're thinking it's going to come back up again. Then you could buy it right here instead of waiting for the confirmation for it to break out, and it'll go all the way up. And then it just happened to continue to go up. And now you have massive gains. So you bought it down here as opposed to up here when it actually broke out of the resistance and there was a good indicator. Okay, so I'll go through an example right now of a couple coins that I just bought over the past, yesterday or a couple days ago. So this is DGD. And what happened was I saw, okay, boom, this is range bound right here between this area and this area. It hit it. It just kept on getting resistance and people just kept on selling it whenever it hit around the 3.3 mark. It just boom, 3.3 down, and then a lot of people started buying it at around the 3.1 mark, and then went back up to 3.3, and then people started selling it again, and then went back up to 3.3, and people started selling it again. So when it went back down and it got down to 3.08, 3.1 area, I was like, okay, I'll look at this. And then what happened was it started coming up again, and I saw it was at that, that 3.3. And then right when it broke out, like it got to be around like this area, right? And this is above the support, which was over here. So I'm like, okay, this is good to go. It's a good indicator and it's not super risky because it already broke out. So I bought it. I bought it right here, and luckily it continued to go up, and I was super stoked about that, and I just held on to it, and then I just held on to it up until around here, and then I sold it, and I should have bought more right here, but I didn't. And the thing is, let's say I would have bought more here before all of this actually happened, that would have been more of a riskier trade. That would have been the second option, the second strategy, because there's no indication that it actually is breaking out and it's broken the new resistance. This is the new resistance, right? So let's say this is the resistance and it comes all the way down here, and I might say, okay, this is the support levels. So if I buy right here, the potential for gains is a lot because it'll probably most likely come back up to at least the resistance levels. And then if it breaks out, which it ended up breaking out, then I'll have a lot of gains. However, it could always just drop down. You don't really know. So it all depends on your risk tolerance. If you want to be less risky, then, you would just buy it right here because this is a clear breakout of the old resistance level. So it's most likely going to go up, which it did, and then went down and went up again. And now it's trading all the way at 442. And if we head back to Binance, you could see, you could do this on Binance. This is the advanced screen for Binance, or you could even do it on the regular Binance screen. But I like using Coinigy because it's, look at how much cleaner this looks to me, in my opinion. Okay, so that was the support and the resistance levels, and that was a super basic intro to that. I'll have a lot more videos on the support and resistance levels, how to use that in the future, but that's just some easy thing to look at when you're determining if it's a good time to buy a coin. And that is basically it at the most basic level when it comes to support and resistance levels. And that is honestly one of the first things that I look at. It's one of the easiest indicators when it comes to technical analysis to just look at and say, okay, well, here's the support, here's the resistance. Where do I think it's going to go? And it's one of the things that I use to get a general sense of if I want to enter a trade or not. Because if it just broke down through the support levels, then I don't want to enter the trade because it's in a downturn. However, if it's bounced back and forth like 2-3 times within a certain range, and then it gets to that level where it's at the support again, I might want to buy it because I think it's going to go back up. And I know that this still might be a little bit confusing, so I will have an entire section devoted just for technical analysis for you. But still, having a general sense and knowledge of the support and the resistance levels and everything like that is a really good thing to have, especially when you're first starting out. Alright guys, that's going to do it for this video. As always, if it was helpful, be sure to smash up the likes, would really appreciate it. Also, if you're new to cryptocurrency, I got that free course in the description below for you. And if you like this video and you want to dive deep into trading and investing and getting into cryptocurrencies, I do have a crypto mastery course. Also, I'll throw that link in the description below for you to check out. Other than that, remember, you're awesome. Let's get to the moon together. Stay profitable, and I'll see you in the next video.